Let's talk about taking losses, losing trades when we are trading futures. Okay, I like you, especially for beginner traders, someone struggling. Maybe you're, kind of scouring and doing searches, trying to figure out what it is I'm doing wrong. Why am I doing it wrong? What is it that I'm not seeing when it comes to trading? And I just like you, I suffered as well. I took losses. I was break even. I was making profit, then going back the next day losing until I really figured out how to read the market correctly. And I always talk about that. And I will always talk about that because until you actually do yourself the favor of learning market structure, you're going to struggle each and every day into your trading. Because if you're depending on or dependent on just a strategy to help you, or not say help you, but to get you into a trade, thinking that's all you need to do is to find, devise, create, use somebody else's strategy to make it within these markets, then you are very much so blind into trading. All right. Someone that told you that's all you needed to know, some particular guru told you that's all you needed to know was just, hey, come up with or use my strategy or buy into this program. I teach you a strategy and how to trade a strategy and you're going to make money. That's not what it's all about. I mean, it is important to know a strategy and to use a strategy because you need one to be able to make it in this business. All right. And become profitable. The biggest thing, consistent and being patient. But you have to understand and be able to read the market, reading structure. Doesn't that make sense? Being able to understand what is it the market's trying to do. All right. Is it pushing down? Is it pushing back up? Is it pushing back down? Because by now you should already know the market can change. The trend can change at any given moment. The tide can change. It can shift. And we don't know as retail traders how long that particular trend is going to last. All right. Before it shifts and makes a move, okay, back in the opposite direction. One of the things that I figured out and found out that helped me, and it's very important to understand and learn, is breaker structures. Being able to determine when structure is being broken either to the upside, to the downside, to help understand a reversal in the market as well. But in today's video, I really want to kind of show you a simple tip or secret that I use when it comes to the strategy. Okay, I'm not going to go into the rundown of being able to show you examples of market structure because I've already done that. There's videos here on the channel. If you're interested, all you have to do is go to the homepage here on the channel, type in or query market structure. A few videos will pop up to where you can get, and I just did one recently and a few more over the last several months. And you'll get a population or a populated list of videos that you can watch covering market structure. But you don't have to learn it from me. I mean, you can learn it from wherever you want to and put your own, because it's one of those things you have to be able to put your own twist on things, have see things visually from your own perspective, and be able to understand how to trade the right way. Okay, because there are definitely so many different wrong ways. All right, and I know a lot of people are probably blowing through money in a sense of blowing accounts or blowing money through trading communities or strategies, or just say courses, for example, and not making money. But what helped me in my strategy and how I trade, and also if you're interested in understanding the way I trade, we have a full-on Discord community. It's free. Okay, just find that link down in the description portion of the video, and there's a trading floor to where I don't do trade alerts, guys. I'm not here to hold someone's hand and is to show them or put out alerts about trades I take because I don't want any finger pointing. You know what I'm saying? Because people do that all the time. It kills me when I see people who want it. Well, I'm sure they want to be successful, but they're just not patient people to really follow or see things through. So they want to see fast returns or fast access or fast way of being able to do something. There's no quick thing. There's no quick way of doing something. It takes time, especially in this business, because I assure you this is going to be the most or the hardest thing you ever this will be the most hardest endeavor you ever come across. All right. Okay. Some people, they may learn it quicker than others, but I'm gonna tell you it's a struggle. All right. So when I started to devise on my strategy, I found a way and a technique that allowed me to pick the right zones. And in this video, that's what I want to show you is what I look for back at a zone that helps me identify a high probability versus a low probability zone, supply and demand, because that's specifically how I trade, is looking for areas of aggressive buying or selling. I don't care what people say. Some people say, oh, smart money is not important. It doesn't work. There's no such thing as it. When I'm talking about smart money, okay, I'm talking about the banks and institutions because they are the ones ultimately in the end that hold the purse strings. They're the ones that make the move. So that's what I'm talking about. if you want to call them the smart entity in a sense, okay? And I should write that down because that does make sense. They are the ones that where we see those big moves in the market. They are the ones that are creating those big moves. It's not us as retail traders. We want to ride the coattail and grab money off from holding the coattail back in the direction which they're trading. So if the market is very bullish, like we got the market right now, in accordance to when we look at the indices, especially the NASDAQ 100, and the market is bullish, then we want to look for key areas of aggressive buying back to areas of demand. I'm going to show you a prime example of what I'm talking about today when in relation to what makes sense as far as high probability versus low probability, and why I look for high probability setups or zones, because these zones are zones that are untested. So you got to think about, if there's aggressive buying coming out of an area and the market is bullish to the upside, and we see a demand area where the market is making aggressive buying to the upside, and there's a zone back at its swing or within a swing that has not been tested, a demand zone. Think bullish, think demand. Aggressive buying, think demand. Aggressive selling, think supply. I'm going to show you a demand example, just for instance, and because the market is bullish. So I want to show you this because it makes sense to look for areas like this, because it increases the probability of a trade working in your direction if you wait for the market to come back to it. And today there was the prime example where the market tapped into a demand zone, rejected off of it, and took to the upside, and it was aiming for an area of supply off the higher time frame or higher base chart. I don't trade, when I speak of higher time frame, I'm not talking about time-based charts like the 60-minute or the 5-minute. I don't trade those charts, those type charts. I trade range charts. People always ask me why. Just clean into the eye. Have I ever traded time-based charts? No. So I don't know which ones are comparable to what range charts. Okay, you know, what's the 5-minute comparable to on when it comes to range charts? I don't know. Okay, so please don't ask me that, because I couldn't even give you an honest answer. And you could ask those individuals in the community. That's why I say it's important to join the Discord. Again, it is free because there will be people or community members that are part of the Discord that can answer certain questions that I can't cover. They may trade time-based charts, and they have switched over and to the range base and kind of spent time, you know, seeing what's comparable in a sense. All right, but for example, here I just want to show you. This is where my trading started to turn around, and I started taking better entries and ones in which I could hold trades longer. Just want to show you an example of a demand zone back at a key area of demand off the higher time frame, but we want to pay close attention to that gap that's resting there, that the market left behind, that the market didn't quickly come back and test. And what does that mean? Untested zones where the aggressive buying took place. I think it as it is logically, oh, they just made a big move to the upside, trying to fill a bunch of orders. Okay, so there's probably a bunch of resting orders resting there or sitting there, and when the market gets back there, those entities, that entity, that bank, that institution, they need to fill the rest of those orders. They've got to, you know, it makes sense. But one thing for sure, the market mirrors itself in a sense to where it has to come back to key areas and fill in gaps or imbalances back. Every imbalanced area you see within the market at some point is going to have a correction to where it goes back and fill those areas. So look what took place here as the market is breaking higher to the upside. We have right here, I'm going to blow it up off of the higher time frame, a demand zone right here. The market pushed up, pulled back, broke higher, pulled back, created a beautiful demand area. Lots of aggressive buying. So that tells me that the banks just filled a bunch of orders to the upside. So they've got to come back and fill these imbalances back to the downside, and I wait for that as a retail trader to see, can I transact, put on position at this area if I get rejection. Now, I'm not taking the trade off my higher time frame chart, okay? All right, and I'm not telling anyone not to trade off a higher time frame chart. I just have a systematic way of trading using a strategy I do, using a higher time frame, moving down to a lower time frame, and then I have a step-by-step series, or look for a step-by-step series of things to unfold. When it comes to the strategy, I talk about it just about in every video here in this channel. So please take the time before you ask questions and just jump into asking questions, because I trust you. I mean, I assure you, any question you may have, there's an answer to it if you spend time watching the videos, okay? So coming back to this zone, we're going to mark the zone. I'm just going to tell you this right now, that this is a demand zone. Aggressive buying. When it comes back to the zone, is there a gap back at the zone? Meaning the last bearish candle to the downside, and then the candle that broke above it, which was this candle right here. Is there any gap back at this area? Yeah, there's a gap right here. See that? back down to the zone. So the market has to fill that space, that gap back down to the zone. And that's the gap that I talk about in so many videos and talking about what makes a trade high probability versus low probability, okay? Because high probability zones tend to work out better. I'm not saying low probability zones don't. If I'm taking a low probability setup, I need to see more confirmation. I need to see this a little bit more take place before I get into that trade. You know, it has to give me more confirmation. But when the market gets back to this zone here, then I move down to my lower time frame and I'm looking for a step-by-step series of things to unfold on the lower time frame, meaning a breaker structure, pull back to a key area of demand now on the lower time frame. Then when it pulls back to that demand area on the lower time frame, I look for rejection to go long. Okay, so that's what took place right here. You can look for rejection at this area on the lower time frame, and then it goes back up here to take out the high at 84 right there. But I'm talking about a simple technique. You know, even though I got it titled as secret, because it can be a secret if you don't know anything about it. Meaning that I look to see this right here, aggressive buying to the upside with that gap right there. That raises my radar. That raises more interest to me because now there's a gap there, and I know that okay, they haven't tested this area. So that means that they got orders on the books probably still resting there that they need to fill. So I'm waiting for the market to get back there, and I want to ride their coattail back to the upside. It's as simple as that. If you wait for those opportunities and things to unfold, then you're going to see setups like that are going to make sense. Like right here, aggressive buying right here. The market does some more additional aggressive buying to the upside. Boom. There is a demand zone resting right here. That is a small gap right there resting back at the zone. When they get back there, what's going to probably take place? Rejection for them to push higher. Orders resting on the books in which they need to fill to do what? Transact, push higher. They got to fill those orders, all right? And they're going to move the market back in the same intended direction in which they were trying to move in, okay? Which is to the upside. The market is bullish today. All right, for all those that have a hard time seeing it to the eye, you can just take a channel and you can definitely just see the market right here. Channeling to the upside. That's what we're doing. Simple as that, okay? But that's all I want to share with you today in this video. Just showing you, look for the aggressive moves, okay? And I'm just talking about high probability versus low probability. My idea of it is to try to find a zone where there is a gap back resting at the zone, because that's going to raise more interest to me. Test it, back test it. We have, a ton of members that are part of our Discord community that spend time educating themselves, watching the videos. Lots of them are elite members. If you want to become an elite member, I'm going to tell you now, the link to that is down in the description portion of the video, right along with the Discord link. The Discord is free. The elite membership, which is $6.99, is through the YouTube program or YouTube tier here. If you click on that, which says become a member, you'll see two tiers pop up. One will say loyal channel supporter. The other one will say elite channel supporter. Make sure you choose the one that says elite channel supporter, because people always ask me which one do they receive the trade breakdowns and the video playlist of videos. The trade breakdowns are private videos that I make give access to those that become or join the elite membership for $6.99 a month. I'm basically walking you through trades that I've taken and breaking down as if you're sitting right next to me, so you can understand the strategy more in detail. Okay, and it's put people more so on the fast track of kind of understanding the way that I trade. And we have successful people that are part of our Discord community that have taken the way I trade, maybe added their own twist to it, okay, or added their own little flavor to it, or trade exactly how I trade, and they're profitable. They are making money. And I'm not going to attest to anyone's success, but you can come over to the community and ask if you want to. I'm just telling you that if you want to become an elite member, it does give you additional perk, because that's what it is. It's a perk or additional reward that you receive for supporting me as a content creator, because that's what you're doing by becoming an elite member, all right, or elite channel supporter. You're supporting my efforts as a content creator by providing this information to you for such a very minimal cost of $6.99. But that's your choice if you want to join or not, because there's tons of video content here on the channel and what you can watch, okay, and educate yourself on, and possibly pick up I'm sure, educate yourself on and become successful if you just spend, time doing so. But I'm not here to tell anyone or force anyone's hand to tell them to trade exactly like me. It's up to you. You have to choose something that works for you and stick with it. But outside of that, that's all I want to share with you today. If you're not a current subscriber, please take the time to go ahead and sub by clicking on the subscribe button down below. All right. Make sure to turn on all your post notifications so you never miss one of the uploads. And last but not least, if you found value in today's content, please drop a like on the video. I'll see everyone in the next one. Take care.